Randy Frederick and Collin Martin join me for our Schwab panel. Randy's Managing Director of Trading and Derivatives. Collin's Director and Fixed Income Strategist at the Schwab Center for Financial Research. Randy, I'm looking at a VIX that still seems pretty darn low here. Given just where we're at, I mean, like objectively speaking, just coming into this week, we were at the lows of the 52 weeks for the VIX. Does that make sense to you?
Well, it may be just a little bit on the low side, but I mean, keep in mind, even though this week feels like it's been kind of a crummy week, we're only down just about 1% on the week, so it's not terrible. That 16 level has been sort of a critical level ever since the debt ceiling deal on 7/1. It has been sort of the over-under. When we're below 16, everybody seems to be okay. When people get a little bit anxious, then it creeps above 16. But even from a long-term perspective, 16 is really not all that high. And I think it ultimately speaks to the amount of real super downside risk is just not that big. I mean, yes, we had some economic data. We had a 7-month low on initial jobless claims today. We got some import-export data from China that was questionable. We saw that productivity went down while costs for employees went up. None of that stuff was really great, but none of it's also not terrible. And in fact, slightly worse economic data from my perspective is exactly what the Fed wants. They want things to just slow down a little bit, but not go off a cliff. So bad news is good news as long as it's not too bad. And that's why the VIX, I think, has been so docile lately.
Yeah, indeed. The connection I also see is that when we have sub 50% odds of a hike priced into markets, VIX tends to be on a little bit of the lower end, to Randy's point here about softening data kind of being a bull's friend right now. Is that 43% by the year end reasonable to you, Collin? I feel like the Fed funds futures pricing for a hike is like the bond man's VIX.
I think you could put it that way. It's basically a coin toss right now. We've seen it move, in maybe a 20% range over the past few days and few weeks, anywhere from 30% to almost 60%. But of course, it's going to be data dependent. Right now, everything's looking pretty good, not too hot, not too cold. And that's pretty much what the Fed wants, as Randy just alluded to. They want to see things slow down a little bit, not too much, of course. I mean, they've kind of taken recession off their table as a base case scenario, which I think is good. But they do want to see things slow down. Otherwise, that's when you get inflation pressures sort of bubble under the surface. So right now, we're right at that 50% probability or likelihood of a rate hike in November, though. Right now, it's sub 10% odds of a September hike. So we think that's very unlikely. We will be looking and watching very closely at next week's CPI report because it does come down to the inflation outlook. And is the inflation outlook, whether it's CPI or PCE, is it going to get down to the Fed's 2% target? It's moving in the right direction. But any sense or any signal that it's stalling or actually reaccelerating would be cause for concern for the Fed. So we're going to be paying attention there. A too hot number next week probably doesn't push the Fed to hike this month. But if we see that trend continue through November, maybe we see those odds rise noticeably above 50%. But for now, it looks like it's a coin toss. Yeah.
Okay. Very well said there. The latest data, I mean, we only really got one interesting print this week. I mean, Liz Ann made a pretty compelling argument that the productivity and cost number this morning has some important implications. But just kind of the baseline jobless number, too, is like a little bit of an eye popper there, Randy. I mean, is there a possibility that, there's always possibility. What are the odds, I guess, that we could get this like resurgence after services ISM2 is pretty strong?
Yeah, it's interesting. I won't put a huge amount of emphasis on that. The ECI and the productivity and all that, mostly because it's all Q2 data. From the market's perspective, that's kind of ancient news at this point, right? Okay. So that I don't think is quite as important. I think Collin hit it on the head. The next week's CPI and then, of course, the PCE, which comes after that, are going to be the most important factors. And as he said, there's very little chance that they're going to hike this month. But the market, as the odds have dropped for September of a rate hike, they have been going up just about an equal amount for November. And so I think for a long time, the market has had at least one more hike priced in, or whether or not that happened in September or November is now shifting out to November. And I don't frankly think it's going to cause any problem for the markets at all. But yes, the labor market has remained incredibly resilient. And in fact, as I said, we haven't seen the kind of initial jobless claims numbers we got today since all the way back at the end of January.
Yeah.
So this is quite surprising. It's been pretty steady for a while. It's been holding in that 200,000 range for quite a long time. Now it's at the very low end of that. But it could be problematic if we see an uptick in inflation, as Collin talked about, and we see the labor market continue to tighten. That's when I think it starts to become problematic. But keep in mind, historically, unless the odds of a hike are above 65%, it hasn't happened. When it's above 65%, it always does. And with it being around 50% right now, we've got 7 weeks to go. So as an investor, you don't really have to worry about this too much because it's quite a ways out already.
True. All right. Sounds like September definitely off the table. November, maybe if the number starts to come in warm, if it shows up in CPI. Does seem like the pressure is a little bit on, given just the consistency of some of the strength of the data recently. I mean, we kind of, this jobless print today sort of negates, I think, some of that dovish interpretation that we got from last week's figure. So a great perspective for us, guys. Thank you very much. Great convo. Randy Frederick, Collin Martin.